You are a clever and educated person, and you have taken the decision to invest into real estate. Well, congratulations, it's a very good decision that you have taken. That being said, I would like to share with you today 3 traps that you have to absolutely avoid if you want to be a successful real estate investor. Those are 3 landmines that a lot of people unfortunately fall into, and I want you to avoid them. The trap number 1 in real estate investment, and probably the biggest trap of all, is to invest in a single house or a single apartment. Because I know exactly what is going on in your mind. You have a limited capital, you're doing your first transaction, and you want to start small. You want to start with a single apartment or a single house. You want to start with something that is affordable and small. But that can be a big mistake that can cost you a lot of money. You probably heard the saying that you should not put all your eggs into one basket. Well, it's exactly what we're talking about. When you invest in a single apartment, you're putting all your eggs in a single basket. If anything goes wrong with the apartment, you're gonna run into problems. For you to really see what I mean, let me share with you a little anecdote. This is a story of Grant Cardone. Yeah, I'm talking about the Grant Cardone, the super famous entrepreneur that everybody knows. Well, it turns out that he started his real estate career by buying a single house, renovating it, and then renting it. When he finally renovated and rented the house, everything seemed to be going perfectly. The tenants were paying on time, and it seemed that he had done a great deal. He found something for a great price, fixed it, and then rented it. But what could go wrong? Well, he started suffering the consequences of all the people who invest in a single house or a single apartment. Because one day, the tenants, well, they simply decided to leave. And the house stayed empty without any single tenant for months and months. Those very long months, well, yeah, Grant Cardone still had to pay the interest payments, of course, and the taxes and other expenses on the house, so he was operating at a loss for several months. When Cardone finally found new tenants, he decided to immediately sell the house and never ever invest again in a single unit. We can also mention the fact that a single apartment is usually less profitable than an entire building with several apartments. Why? Because first of all, there is more competition to acquire the single apartment, because when you want to buy a single apartment, there are a lot of small investors or people who want to buy the apartment who will be a direct competition to you. And when you say more competition, it means that the price automatically is going to be higher. And if the price is higher, it means that your return on investment is going to be much lower, obviously. Long story short, when you invest in real estate, invest in a building that has at least 3 apartments. This is the absolute minimum. But Daniel, investing in a building that has several apartments is so expensive. I don't have all that money. How can I do? Yes, I know. Investing in a big building can cost a lot of money, and maybe you don't have the capital necessary to buy an entire building. But listen, it's better to have the 10% of a very good building than having the 100% of a very mediocre single apartment. Especially that nowadays, there's a bunch of crowdfunding platforms that allow you to invest small amounts of money into big buildings. So you can invest 20, 30, 40K, whatever amount you have available into a big building with other investors. So you can invest a small amount with all the advantages and all the safety of having a big building. And by the way, I created myself one of those platforms for people to invest small amounts into real estate. It is called Terrace. I invite you to have a look at the description below where I put a link. It's called www.terrace.ch. And if by any chance you speak French, I wrote a book. This is a how-to guide to invest into real estate. So I share with you years and years of experience into a small little book of only 100 pages for you to become an expert into real estate investing. I will also put a link in the description for you to buy it. It is available in the Kindle store or in paper book format. Now, the second trap that you have to absolutely avoid when you invest into real estate is investing in something that is old or distressed. This is a trap that I almost fell into years ago. You know, that was around 2019 when I was really starting my real estate investing career, and I was looking for an opportunity in my hometown, and I saw this building that looked absolutely amazing. It seemed to be a great financial opportunity. Why? Because it was very cheap. When I did my calculations like this very quickly, it seemed that the return on this building, meaning when we divide the income of all the rents by the price of the building, it was almost 9%, which is, I can tell you, very, very high for this specific region. And on top of that, I had talked already with the owners and I managed to get a substantial discount on the price. I was convinced that I had done the jackpot, that I was making the deal of the century. But then unfortunately, I had to deal with something that happens quite frequently when you're in business, which is disappointment. Because when I had a close look at this building and when I realized how much it would cost to operate this building, I realized that I would probably not make any single cent on this building, that I was probably going to operate this building at a loss. Here was a problem. It was an old building. It had been built, if I remember properly, around 1901, more than 100 years ago. And it had never been fully renovated, which means that every single month there was some repair that was needed. Something was getting broken in one of the apartments. One month it was necessary to repair one window, another month it was necessary to repair one sink, another month it was necessary to repair a few steps because they were very old, and one day it would happen also that we would need to change the entire roof of the building, which cost, I can tell you, a lot of money. And the worst was when I realized that the owners, the guys who were owning this building for the last 25 years, they had almost never done a single profit with this building. Every time, whatever margin they were getting, whatever money they were receiving from the rent, everything was going away in some kind of repair. The lesson of this story is very simple. Invest in a building that has been built maximum 15 years ago, or that has been renovated completely maximum 15 years ago. Of course, the newer the better, because if you invest in a very new building, you will need to do very little repairs for the next 15, 20 or 25 years. And now, the third and final trap that you should absolutely avoid when investing into real estate is managing the property yourself. Do you want to take care of sinks that are broken? Do you want to take care of toilets that are clogged in, of little insects that are getting into the apartment, of the tenant not paying on time, and all of those things? Do you really want to take care of that? Yes, exactly. That's what I thought. You don't want to take care of that. You know, a few years ago, I got to know a family who owned 3 buildings, and each building had around 5 apartments. So in total, they had 15 apartments. And since they were a bit stingy and cheap, they didn't want to hire a property manager to do the whole management of the properties. So they were taking care of all the little things, all the little BS that comes with owning an apartment. They were taking care of receiving the rents, of doing the repairs themselves, and so on and so forth. And let me tell you, in this family, both the dad and the mom had full-time jobs. So doing all of that, I can tell you, was like having another full-time job on top of it. And after a few years of doing all of this and having so many frustrations, they burnt out completely and they decided to sell the buildings and never invest in real estate again. So if you don't want that story to be your story, there's a very simple solution, which is hiring a property manager. Yes, I know what some of you are thinking. Some of you may be thinking that you can save the money that you should pay normally to a property manager and this money could be in your pocket. But listen, this is not the right mindset to have, because your time is valuable. And it's better, let me tell you, I can tell you this by experience, it's better to pay a bit of money to somebody to save up your time, and more importantly, to save yourself stress. And I will also tell you this, a good property manager is actually going to make you earn more money. Why? Because property managers, they have a big network. They know the market very well. So if one of your tenants leave, they will be able to find a new tenant very quickly. And also they know the law very well. You know, all those tenant law, it's very complex and very difficult, but it's their job. Those are professionals and they know it very well. So they will be able to maximize your profit. And yes, I said a good property manager. Of course, there are some property managers out there that are very bad, scammers, or unprofessional. But if you look on the internet, if you look at the reviews, and if you go for a company that has a good reputation, you have nothing to lose. So that's it. Those are the 3 biggest traps to avoid when you start investing into real estate. Number 1, investing in a single apartment. Number 2, investing in an old building. And number 3, managing the property yourself. If you can avoid those 3 traps, you're already ahead of 90% of investors out there. So congratulations. If you like this video, I would highly appreciate a little thumbs up, and also don't forget to subscribe to never miss a video, and I will see you very soon. Daniel out.